In this week's fastest 4 minutes in finance, should you be worried about the value of the dollar? Hello and thanks for joining us. I'm Scott Inman. Well, if you've been sucked into a so-called doom scroll recently, you've likely read the predictions of the implosion of the U.S. dollar and the collapse of modern society as we know it. And it's true that the dollar has shown significant weakness in the past year, hitting a 4-year low this year after a 10.7% decline in the first half of 2025, largely driven by interest rate cuts, rising deficits, and uncertainties over tariffs. And this has added fuel to the doomsdayers, who are always promoting an apocalyptic agenda. Well, if you've been reading that, like I have, it can be alarming and cause you worry over your investments. So we need perspective. Well, here's a chart from LPL Research, comparing the U.S. dollar against currencies from other advanced countries. And you can see there has been a shift in the dollar's strength. LPL chief economist Dr. Jeffrey Roach explains that there's been a recent appreciation of the dollar. He writes it reflects investors' assessment that the U.S. economy offers a uniquely strong combination of relative growth resilience, higher returns, and financial system credibility. In other words, it's still the best thing going. The Iran conflict has driven dollar strength as well. Roach writes, this follows historical examples. During times of global stress, the U.S. dollar has grown stronger because the U.S. economy is seen as the place of stronger growth and productivity when compared with other countries. He also explains the liquidity of owning the dollar is preferred. As the dollar story is improving, you've also likely noticed a huge tumble for gold. And that seems counterintuitive. Gold is seen as a safe haven during times of unrest. But since the Iran conflict began, gold prices have dropped 21%, and the price is down 27% off its all-time highs set back in January. LPL Research reminds us that while gold can, quote, have historical tendencies, it can trade to its own tune. The bottom line this week is twofold. First, currencies may be seen as stable, but can be just as volatile as the stock market, or even more so. And the speculative nature of trading in it makes it an asset class we don't often recommend for retirement savings. And second, don't let the doomsday predictions drive your investment decisions. They are either looking to sell you something or looking for clicks. What they don't offer is perspective. Making major global economic predictions is easy to do, but hard to get right.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.